Good morning, everybody. Yesterday was what I referred to as a frog in a blender day, which was anticipated, considering prices were down at the levels that they were. 5-minute chart of SPX there, and things coming down as far as they did into this area, areas of support. Obviously, we always look to the left. It didn't stop at this one, the first one. So we looked to the next one, and prices have stabilized there. And it's about as neutral as it could possibly be. Just got the AD line here, was just hovering around zero there, kind of whipped around a bit, but for the most part was hovering around the zero line there. And, the VIX didn't do anything, kind of rolled at the end of the day. And you can see the ticks were just whipping back and forth and back and forth. And, when you get pivot highs versus pivot lows, and they're relatively close together, and the moving averages are intertwined in the prices, stay away. Unless you're really, a ninja trader, to whip in and out of there. So, pointing out the kind of erratic, whippy, and then eventually traders get tired, It's like, hey, I got a profit. Looks like it'll keep going, and the whole thing just evaporates. And if you don't have software that, raising your stop, or you're not actively raising your stop, whatever your profit you may have had is gone in an instant, and then just whipsaws back and forth like that. So this is like our dashboard, stocks that are trading on upticks versus down ticks, where the bar is spending the majority of their time, in an upper part up above, 500 to 1,000 or down below. And when they're whipping back and forth like that, it's one type of visual aid that tells you what you're dealing with. And of course, the AD line and the volatility index. And so prices are down at that support, which you can see on the 60-minute chart there, and got stabilization. So that being the case, I'm looking for today, giving buyers, anyone, the opportunity at least for a short-term buy-side bias. We'll see how it plays out. So interest rates are up a little bit. Looks like they're going to be coming down here. This is just, how we look at things, looking to the left, and look at one support area, begin to hold, it didn't. And so now it had several days there going sideways and then down. So wide range bar. Could the wide range bar being an ending bar? And so while we got this support area here, just these overlapping bars, this is an igniting bar, wide range bar igniting, which says, hey, prices are going lower. And now we've got a wide range bar, which could be a breakdown failure. You can see the green support area there. Sometimes they don't get all the way down there. So we got to keep an eye on this, like with everything else. And you can see some green here. Let's see what the dollar's doing here. And it's in support. So the anticipation of a turn, and kind of, gapping below this green bar. So not any type of definitive patterns here yet, but just based on where prices are, we'll go to the futures and seeing how prices are down on that support area. You can see here, let's scroll that over a little bit. This is, just part of how we approach the markets, is that we mark off significant reference points over to the left. And then when prices get down there, looking for support to be created. What does that look like? It looks like a pivot, a bar with 3 higher lows to the left and right, and then retest and the downside momentum beginning to slow. And that's what's happened here. And so now we've got this retracement prices. We're going to start the day. There's still 25 minutes to go or so to the open, but they're up here near this pivot high. So we have for the short-term basis anyway, a little trading range going on there. So what do we want to see? Well, ideally, we see some consolidation here at the open. Maybe it even dips down. That would be even better. And then it comes back up again, which would be an ideal scenario for a move up toward this 4,000 level on the future. So, go back to the factory work and see where's there a congestion area. And it gives us a guide as to where prices are likely to stop. And there isn't a huge void. And there was a lot of questions yesterday in the MT Live session. Even for those, there was one person in there that had taken the swing course, which I thought was interesting. Is like, I still don't get the idea of a void. And so when something is new, even if it's, well, it can be simple to someone else and not so simple to you, but especially, for myself that I've been doing this for years, but it is a simple concept. Momentum move. And there are big voids in there, not so big voids. And so if we see prices enter this area here, right, this is a momentum move, and there's got this congestion here. If in the next couple of days this fails and heads lower, there's a big void below. But short term, pivot, pivot, pivot. So buyers are stepping up. Why are they stepping up? Look to the left. Here's resistance. If we can get some type of a buy setup here, right, I'd be going to the 5-minute chart. Some consolidation here, well, then we'd be targeting coming up to this area over here. And so simple concepts, short term and more intermediate term. Now, the depth of retracement down here sets up the possibility and almost maybe probability of a continuation pattern lower. So this is why they call it the hard right edge. It's the unknown. Nobody knows. Yesterday I spoke about, what might happen here, what kind of a pattern. And so the idea was it's going to hold here, and it has. Now, how far can it retrace? And if you remember the conversation, you're going to look at the pre-market commentary was, hey, if it can get some legs and come up here, right, somewhere in this area, and it comes up in somewhere into this area, that is where sellers are going to want to show up. And then from there, we'll see whether we get this or whether we get this. So we've got another week or so going into the Fed announcement, and then on the 16th options expiration. So ultimately, there's going to be some, let's just say, hesitancy to commit in a big way, should be, before that information comes out, and hedging around it and so on. So the expectation is we're probably not going to get any significant moves in the short term until we get into that time area and that information. And of course, there's some inflation data coming tomorrow, which may provide some speculation as to what happens in the middle of the month. So on a short-term basis, looking for a little consolidation here, maybe, and then at least some type of an attempt to go higher. After moving down as far as it has. Give me a sec here. Right. So it's being said in the social media there that, it could be tradable void is a concept that could be more difficult to understand in reference to multiple timeframes. And I understand that multiple timeframes is a huge part of understanding technical analysis. It's, and me and indicators, put indicators on there, and you're just going to get a brain hemorrhage trying to figure things out rather than the simplicity of the price action. And what I'm explaining here, here is a daily time frame, and here is a 60-minute time frame. So from a swing trading perspective, no one should want to put on a swing trade with the depth of retracement and the angle of retracement here, even without any type of significant reversal, where this pattern is more suggestive of what I've already explained, some kind of short-term move up. And we go to the smaller time frame and say, well, is there a tradable void versus, hey, if this was a whole big mess of stair stepping down, whereas prices had come down here, let's say the next move down here went like this, right? And the next move down went like this, and then it went like this, and then like we'd have a big giant mess right over here. I wouldn't be saying there's a tradable void, but because it came down in such a rapid vertical way, it does have that tradable void. So when we look at a chart, and we say, okay, this is down at a significant support area on this higher time frame. That's my little green box that's pointing to over here. And now I start seeing this bottoming pattern, call it whatever you want. Buyers are stepping up. All right. It's at resistance. Unless it collapses back down to here, if it shows bullish price action, right, the concept of absorbing supply there, it opens up the door to a move higher. Now, is it a significant move? Well, kind of from a short-term basis. 5-minute chart, 15-minute chart, daily chart. No, you got the 20 MA there, but it is rising. So understanding how to put together multiple time frames for an active investor or trader is a very key concept. Understanding what's going on and not getting confused, or understanding why prices come down and they look like they're going to go up for whatever pattern might form here, and why they stop going up quickly. So anyway, so I noticed, if you looked at the premiums in SPX, things are getting tighter. And here I had 38. Let me see if they changed. Like 38.30, we look for something acceptable, right? And then look at the chart. And so 38.30, right? I'm saying 38.80, 38.80. I'm saying 38.80. It was down below 3,900, which is good. So it's close. It's not like what we saw months ago where it's like, damn, things were coming down like this and was like way down here. No, that ain't happening. And that's what I refer to as a no-brainer type of scenario. It's just not highly, highly unlikely to get there. So common sense, things have gone down multiple days in a row. They're on support. Can they get below or get down to that 38.80? Well, of course they could, but they travel this far. It's like, hey, try and run 15 blocks if you're even possible to do that. And then somebody say, hey, go run another, you're gasping for breath, go run another 5 blocks. Well, that's not likely to happen. And so, and then let me put a couple of barriers in front of you to jump over. So here's 3,900 and you got that line of defense. So that's a reasonable spread, even though, strike to start with for a spread, even though it's relatively close. And then up above was 4,005. Now, if we have a short-term long bias and 4,005, is it possible to hit that? Well, sure, but you've got this resistance here, but it's not an ideal type of scenarios when things are bottoming at support. I don't think it could get beyond that. But after prices have traveled this far over so many days, to think, can it get down here? Right? So weight of the evidence, where's support, where's resistance, what's reasonable? So more unlikely to go significantly lower. And as buyers are stepping up and we've got this bottoming pattern, which we reviewed already, the possibility of at least going up. Now it comes down, you can do anything you want, right? Right? That's what trading's about. You make the rules. So you still got a reasonable level, even on the upside, but it's more reasonable to think that the markets will attempt to advance since they've gone down as much as they have in the short term, and they're at support. Well, Thane, the bars are big, but you're in a trading range. Right? You're in a trading range. We're coming, into the end of the year. There's going to be a hesitancy for, I think, big moves unless some news hits. There's expectations of the Fed not doing as much. Okay, this went up on the news and came right back down again. That was a disappointment. We thought like this could at least get up here a little further. And this end of year option expiration. It's a big thing. So it's the last option expiration of the year. So, big bars, like a gap down like this after multiple days down. I don't remember what the premiums were back then, but it was more likely there was more of no-brainer scenarios as far as doing that type of credit spreads. Right. So NASDAQ down here, bottoming pattern coming up to that swing high, those swing highs there, and prices are backing off. So while there are things that are more difficult to understand when you're new to concepts, look at how reliable the concept of simple support and resistances and looking to the left versus drawing trend lines and Fibonacci lines and Elliott waves. The simplicity of this is amazing. And believe me, this is things that it's kind of interesting how things evolve. When I started doing this about 30 years ago, there were no internet. There was very few books around, but the concept of support and resistance was there. But what happened was you get inundated, but there were no platforms like there were today, but the rudimentary type of things, there was indicators in there. And these platforms instill a belief in you that this is how the markets operate. You need indicators. You need to draw trend lines and so on. And so you go down this rabbit hole of trying to figure out which indicators and which settings and so on. And for most, they give up because it's just too confusing. For me, I got lucky in a sense that, I was ready to give up. But before I gave up, I took all the indicators and lines off the chart. And I said, oh my God, it's probably was like the first paragraph I read in some book about support and resistance. That's it. And then, the evolution of understanding multiple timeframes, which there weren't back. Well, there was daily and weekly, monthly. There were no intraday back then. So, it's just putting together a method that revolves around simple concepts. It doesn't guarantee that everything works every day. That's just not there. But, simplicity brings consistency, and you just have to follow it. So the Dow was the stronger, broke down here, bottoming pattern. This was the weaker, right? This broke down further under the pivots. And so breakdown, retracement, little shakeout at resistance. So we start the day with these different markets at resistance areas, short term, and backing off from them. So you see prices coming up, right? Looking to the left, shorter time frame, they stall and backed off. Just look to the left and it was right there. Now, how far this retraces is going to be key to the idea of whether prices can enter this short-term void. Now, we want to buy this on the pullback or wait for some kind of breakout? That's a choice. So if this begins to bottom out here, we get a type of breakdown failure pattern, or if we were to get, say, a pattern like this, where say this pulls back and it breaks down under this pivot and then comes right back up again and it's going sideways here, we'd have some type of head and shoulders pattern on the 5-minute chart, and that could be a long entry before it clears this. So again, utilizing more multiple time frame analysis, and as we get into smaller time frames, it does get more intricate, but that's not where someone should start out doing this. They should start out with 1 or 2 time frames, make it easy for you to understand that. All right, let's look at the others. Bitcoin, it's up here a little bit. That's and if I was in this, man, I would just be nervous as hell if I was long. And if I was short, I guess I'd be nervous too. But I mean, this is kind of like the coil being wound. Which way is it going to go? And you can see the bottoming tail there and the topping tail there. And I don't know, but this is still bearish on the weekly time frame, and it's got room to drop. So the clock is ticking. Silver still looks good. That cleared that pivot, and this is a void. Look, momentum move. Now there's a big bottoming pattern, big correction through time. And so this isn't a pivot yet. There's support down here. But ideally, this is so close to this high here. I think it's going to stall, and you got to keep an eye on what the dollar's doing. It's coming down to support here, so that could be a headwind for it. And interest rates are moving up. I had that chart up there. So I think that's about it for me to go over here with everybody, because Dan's got to cover some stuff. So looking for some type of short-term upward attempt, and then we'll see where it goes. I didn't notice what the 2-year was doing. This doesn't give quote for the 2-year, but I see the 5-year popped up here. And, I don't think things are going to change much as far as these inverted yield curves. All yours, Dan.
Good morning. Yep, I'm hoping for this head and shoulders scenario Greg was talking about. Perfect timing. Fed announcement next Wednesday, 2 o'clock. And even though yesterday was boring, it's what we need to set up these continuations up or down. All right, we only did one. We did one earnings trade yesterday, Sienna, the 40s. We got $1 for them. So I said just bid a nickel. Let's see if we get filled at a nickel to avoid 8 days of risk. And so, I've been keeping track this season, and I just showed Greg we're 56 for 59. So whoever thinks that trading is a coin flip is just denying reality. DXCM alarm went off. We entered a put spread on this, and I was going to post this as a directional. Today's Thursday, over Tuesday's high, but now it's blasted. Now it's up here. So I just sent a text saying we sold it for 80 yesterday. Bid a dime. Let's see if we can make 7/8 of our money overnight. Be done with it. Any other opens just asked, so let me just go to my interest list here. These were earnings. GME, whipping around, relatively flat, nothing to do for now. This shows a gapping down, but I don't see a gap. HCP, 2870. So this is a nice gap. I'll put that here. It's bottoming pattern. This was a pattern that I said yesterday we could trade up or down based on the gap, but I kind of favored the upside because of this weekly leveling off. So that's a long watch. GEF. No, I have no idea what you're saying to me, FT. So this, I see one print, but I don't trust it unless it's liquid. Same VRNT, we'll come back to those. Napa. Why don't I see prints? Did I lose No. I don't know why I'm not seeing prints here in Napa. All right, so if it is gap in the 1627, then that's a beautiful 30-minute long. And so that's on the list. Let me put that in a window here. Napa. FT, I'm not even part of that discussion, so maybe you're talking to Greg, I don't know. OXM, I see a print or two up, but no pattern. AI flat, but this is a Head and Shoulders. Poor thing looks lower, 30-minute low. Cap 985, no pattern. Rent. This could be the start of a bottoming pattern. That's a nice gap. Let's see if it holds. YQ, no pattern, bear gap down. Sienna, we talked about. KYF. I see a print here at 50, but not much volume. But if that is gap in the 50, then I would favor 30-minute high for puts. These are still earnings. GMS 54. Gap's too big. Momo 6. We'll come back. Maybe 30-minute high. Ovanian, no prints. Hoft, I see one print, but not much volume. Seb gapping down, penny stock, you're gone. EXPR, it's one of these little retailers. That's a big pop. And I left this on my list yesterday, saying exactly this. Maybe it surprises and has a gap breakout. Tesla still having problems in China. So this, I don't short things down 4 bars near a prior low, but this and Amazon have been the weaker of the two for swings. On Netflix, I posted as a put spread watch. It was up more, coming in a little hard. 30-minute high. This was on my list yesterday. There's been activity in the EV stocks. We traded it on this gap earnings breakout. And it has room. It has room to 16. And it's gapping up here. So let's keep an eye on this 30-minute high and scan the sector. A couple here from yesterday. Axon is a short under yesterday's low. DXCM. Toll had earnings yesterday, bull gap. I'm hoping for a 1, 2, 3 for tomorrow. Same with GWRE. This is a beautiful end of day base. Up in the morning, little gap negated on earnings. That I like it better even for a day trade if it didn't have this resistance right here. But that's a beautiful 15-minute chart. Ollie North had earnings yesterday. I'm going to keep an eye on. So let's see. Some things I just watch for a couple days. NUE, let's see if it can stabilize. XLV was a buy setup we talked about in MT Live yesterday. This still looks great. All right, Napa did gap up there. Watching on a pullback, you see HCP. That's a gap breakout. Gap breakout right there. Cooter. All right, so that's probably my Sienna. Yeah, it's Neil. Yeah, because I added in multiple accounts. Cooter here is not earnings, but it's sure getting whacked. I don't know what happened to that. So I'll watch that. This GEF I'm watching. That's a nasty gap down. Very light volume right now. Yeah, I'm out of Sienna, so I got filled. Nice job. And notice we did not get filled instantly at the market open, which is telling me, you know, the 5 cents was not even a total gift. But you gotta love that. We sell them for $1 yesterday. Sell them for $1, close them at a nickel. Gotta like that. All right, DXCM. Where's the midpoint here? Wow, midpoint's 40 cents. I thought we would have a bigger gain than that. All right, I don't want to pay 40. That's 50% of max profit. I'll keep an eye on it. T. Alex, I thought you got out of T yesterday, and I was saying it looked fine. Okay, got it. AMBA, I posted. AMBA posted put spread. It gapped over the entry. Let me see where the juice is now. AMBA 70.62. They're spreading 85 by 130. Wow. Wow, they're spreading. Midpoint 6 and Q's coming in hard.